Okay, guys. I'm going to go to Ask Scruff. Now, this one's for Stephen. Salute to you, Steve. And it's running on from something we did in the Zoom calls. Now, this is recorded a market call on the 22nd, which was a great call discussing the buy sheet. Right, okay. There's a number of elements to unwrap here. Just plug that in. Now, the buyer sheet is not a signal service. It's a way of viewing the market in such a way that you can get a gauge of what's happening. Now, this one's mine. Theirs is pretty much identical because it pulls in this information the same. And essentially what you do is you key in some figures based on certain criteria, and it tells you a good viewpoint of the market. All right. Is the high time frame selling? Are they buying? What's the mid doing? What's the now doing? And it helps you gauge your targets, your direction, one thing and another. And it visualizes what you should know in the first place. Now, as that comes down, it's saying that we were discussing a saturated market. Now, a saturated market is where everything is stretched. Now, these sort of scenarios are, well, let me just kind of switch this off and I'll come back and then I'll come to the second bit. Are when you're looking at it and you can see there's big red candles all the time. All of your oscillators are overstretched. You can see a Bollinger Band is flaring out. This is a saturated market. Now, if it's just on one time frame, it doesn't really matter. You know, just if you're looking to sort of go long, you want the smaller time frames to be saturated so that it's actually bottoming out. In other words, and it's a case of helping time the market and not buy at the top of the market. You want to buy at the bottom of the market. Buy low, sell high. Now, if a market is completely saturated, now that means your 5 minutes stretching, your 15, your hour, your 4, and even your daily can look a little bit sort of wayward as well. But certainly from 4 hours down, if they're all stretched, now in certain terms you can go, oh, well, there's a big trend. They're all going in the same direction. Well, yes, they are. But they're also getting to the point where the roadblock is coming, and that's where your levels become very important. So if you see overbought, oversold right through the time frames, and it's against the main direction of the big boys, and that's what you'll see in the higher time frames, you might find yourself actually at the wrong side of the market, and that's where you get caught. Now, this rolls on to the second part of that, where it talks about the big boys manipulating the market. Well, let's put it another way. If you can see it, do you think they can see it as well? Well, of course they can, you know, and they'll see it a lot better, and they'll actually use that against you. Likewise, they'll use the low time frame saturation against you. So if you can imagine you've got a key level, right? Key level, and the price is in a general downturn, and then it pulls back into that key level. Now, every man and his dog, because this is what the educators tell you, will say, right, you would now sell that on the level. General trend is down, it's pulled back into the level. You look at your RSIs, one thing, another. Yeah, it's gone to the top, so therefore a sell is coming in. I'm just going to sell it because that's what you're told. RSI high, stochastic high, sell it. Right. Now, you might be right. And let's see if in the comments whether you've had this scenario. You put your order in and it goes and hits your stop and then goes exactly where you thought it was going in the first place. Now, that's manipulation. Now, some people call it stop hunting, pin grabs, liquidity sweeps, whatever you want to call it. These terms are there for a reason. It's not. It's sometimes the bigger boys, they know they want to sell it as well, but they can't necessarily get their orders into the market because the size is too big. They've got to stage into it. Well, if they're going to stage into it, that means they have to induce orders. And basically, they're just going to use the weaker traders to their advantage. So they know, on average, you're told to sort of go 1-2% of account as your stop, right? Fine. Well, if you're on £1,000, that's 10 quid. And most people are told to trade around £1 1,000, that sort of thing. That it's an age-old thing. So that means the stops are going to be roughly about 10 points or 10 pips above that level, right? And that's just basic maths. Now you're going to have those with £2,000 account doing the same. They might be running at £1. That means it'll push it up to 20. And if they're doing £2, it's at 10. But they know there's going to be a cluster in and around there. So what the big boy will do is, instead of selling at that level, he'll buy and push the market slightly to the upper side. Now, they can do it through buying power because they have it. They can put some reasonable orders in that will push the market up. And it's only got to go up a little bit and it'll hit those stops. Well, if you're selling, those stops are buy orders. So it will then push the market up a little bit further, take out the next cluster of stops. Might put in another order in just to help it along its way and push it up. And before you know it, the market's pushed up about 30-40 pips. And you're thinking, what the hell's going on? My stops are being hit. Shit. Oh, no, it's not a pullback. It's a reversal. Arseholes. I better buy the market because it's going up. Well, at that point, the bigger boy sees the orders sort of accelerating up, takes his profit at the next level sort of thing. And, well, his buy is now a sell, puts a couple of sell orders in, and the market starts coming back down. But the cannon fodder that had been now buying because they think they're wrong are still putting their stops in underneath the original level that was there in the first place. And those stops are now sell orders. And then down it comes, and it comes down with some gusto. So that's a form of manipulation. What they're doing is they're looking at the markets being saturated and then using it against you. It's not that they can see anything more than what you are. They're just playing the game a little bit better than you are. That's it. So nobody's out to hunt you down. They're just trading at a different level to you. Hope that helps. Catch you soon.